Welcome to Real Estate Made Easy with Suzy Appel.
Well, hey, everybody. Suzy, what's going on?
It's a great day, Southern Utah.
It is a great day. It's good to see you again.
Good to see you too, Michael.
You know, you had a great party at your house the other night. I got to say thank you, live and in person with in front of everybody here.
It was fun. It was a little chilly, but the food was great.
It was
And the company was even better.
Yeah, it was great. The food was good, and I'm glad that you gave me your husband's sweet potato recipe. So
Actually, that was mine.
I'm glad you gave me your sweet potato recipe that your husband tried to claim. So we want to welcome everybody to another exciting edition of Real Estate Made Easy with your friend and mine, the incomparable, the effervescent Suzy Appel from Real Broker Red Rock Realty. Suzy.
So glad to be here and talking about real estate once again.
We are glad to have you. And here on Real Estate Made Easy, I'm going to ask you this question. So, Suzy, I know you get a lot of questions from all these buyers and sellers you're working with. So tell me, what are some of the biggest real estate market questions that are being asked of you today? Like, for example, will mortgage rates continue to rise?
That would be one of the biggest questions.
Do we have an answer?
I think so.
Okay.
I've been doing my research, actually.
Then I will let you go to it, girl.
Okay. Let's answer the question. Yes.
Okay.
Mortgage rates are going to continue to rise. We don't know how much. We don't know how quickly. I think we have seen the worst of the rates in terms of how they have actually doubled.
Oh.
The rates have more than doubled since January 2022.
Oh, my goodness. What are we at today?
It's 6.95%, kind of holding steady right there.
Okay.
Yeah.
And where was it before all this happened?
Below 4, like 3.5.
Oh, my goodness.
Yeah, lower, 3.22 is what I have written down. So that was a historically low interest rate. And now we're a little bit more average, but we have been so historically low for quite some time. The problem was everyone decided that that was the average rate.
Oh.
And that was not true. So we have to overcome that now.
So we got used to those good rates, which we thought were the good times are just going to roll on.
Yeah,
and now we're
forever,
looking back.
right?
Oh, those are the good old days. And it was 3%. And yeah.
So now we have a problem because we're starting to recognize that this is a real rate that's probably going to be around for a while.
Yeah.
So that's okay. People are easing and feeling better about this the longer it goes on and accepting of it. So that's what we needed.
So how do you, in your infinite realtor wisdom, help people to buy a home when they're like all worried about, oh my gosh, interest rates are crazy and I'll never be able to afford this. And then the seller's going, oh my gosh, we may have to do something because since interest rates are so high, we'll never be able to sell the house. How do you overcome those objections?
Well, it's taken me some time, and I think I've mentioned this a couple times on our podcast, but it's taken me some time and research to wrap my head around what's been going on, right? Because for the first few months of the year, no one knew. I mean, are we going into a recession? What's going to happen with rates, right? At least now we kind of feel like, okay, they're sort of stabilizing. But think about it. They are tied to inflation. And we are at an all-time high for inflation.
Oh, Lordy.
Right?
Yeah.
So until inflation stabilizes, and that's going to be tied to the rate. So it's projected, based on the research I've done, that they may increase on into next year. But the research is showing that nothing drastic. Maybe a point or two more, somewhere in that range. But I think just watching them stabilize is going to have people just relax a minute, right? That's what we need. We need something that sticks around for a while.
So, is this still a good time to look at selling and buying a home with the interest rates doing what they're doing?
Yes, it is. And the reason why is because we're looking at price, just the overall price increases and decreases in the market, right?
Mm-hmm.
So that's kind of the next question I get all the time is, what is the forecast for the prices in 2023 and 2024?
Wow. Did you bring your crystal ball?
If I could answer that,
Yes.
in your words, I would be a frickin' millionaire.
You would be.
Right?
I hope you're all listening because she's about to be the millionaire.
So what I'm trying to do, and I'm spending quite a bit of time now doing my research, because that, I think we as realtors now have value for our clients to say, hey, this is what's coming. This is what the market is saying. And so then we can all prepare and look ahead and try to make decisions for our lives around real estate. And so, yes, so we have prices that, let's go back a little bit. Let's talk about 2020.
Yeah, let's do that.
2021.
Okay.
We saw in our market, on average, a 20% increase in equity.
Wow.
Now, some of us had more, some of us had less, but that was an average. Well, that is not sustainable. That is not typical, right?
What's typical?
A healthy is somewhere between 5-6%.
Okay.
Okay.
Yeah.
So we saw huge gains in the market. So the good news is most of us in Washington County, Southern Utah, and the United States as a whole have a lot of equity in our homes. So that I'm sort of mixing this all up, but we hear a lot now is, oh, the market may crash. There may be a wave of foreclosures coming. Well, on average, Americans have a good portion of equity in their homes, and that's why we don't expect a huge foreclosure market, because they have the equity in their homes from the last 3 or 4 years.
Okay. Well, that makes sense.
So they have options, right?
Well, yeah.
If they're struggling, if they lose their job, whatever, they have that equity in their house. They could pull out a second, they could refinance, they can sell
Yeah.
and then go elsewhere.
So where I live in my neighborhood, I've seen some ads for homes that are for sale, and they've had price reductions of $10,000 or $20,000 the last 3-4 months or so. So what I'm hearing from you is that because up to this point there were price or value equity increases of 20% or more, that's really not very much in relation to the whole the whole sphere right there. I've seen homes that were originally they might have, like in southern Utah, $180,000, $200,000. Now they're going for like $450,000. So if you take $20,000 hit on that, you're still up quite a bit. So it's not that big of a deal.
And so in the first part of the year, we as realtors were really have a difficult time pricing homes, right? Because we didn't know what the market was doing and was going to do. Now we can. Now we're pricing them accordingly and accurately. And so we're not having to see these drastic price reductions, because now we're going in and we're listing them where they need to be listed.
Do you forecast as best as you can some more softening of prices through the end of 2022, going into maybe the beginning of next year?
Well, if a seller is ready to sell, they're going to price their house where it needs to be priced, and it's going to sell. And we're seeing homes in the multi-million range sell.
Really?
Yes. So it really is. I'm very encouraged. The last probably even 30 days locally, I'm excited.
Well,
I'm excited. There's buyers out there buying homes, and We're selling homes. And so, yeah.
So this is actually good news, because I remember in a meeting that we were in this week, you get up and announce that you're busy and you've got a lot of first-time home buyers that are coming in, which historically in the markets in the past, when rates are going up and all this stuff, first-time home buyers are generally the ones that are priced out of the market. What you're seeing is that even with all the movement that's going on, there's a lot of first-time home buyers that are getting in.
They are. They are. And if they can qualify at this rate, they know they're going to become a homeowner and be able to refinance in the future when rates come down.
Wow.
So it's a good time.
I think that's very encouraging. So that means that if you've got if I'm a homeowner and I'm looking to move up, I'm probably going to be in really good shape because I've got some equity. I probably have some income that I can use to make the payments. So it's actually a pretty good real estate market to both buy and sell.
It's becoming a much healthier real estate market.
Yeah.
Because as you're aware, our market here for about 2 years was off the chart. I would call it a frenzy market.
Yeah.
Right?
Yeah.
And that's unsustainable. It's not healthy. And so we are now becoming a healthier real estate market.
Yeah, I like that. I don't think this is a crash. I think this is more of a correction. It's just a little market correction. When I first started looking up here a couple of years ago with some of my family, we'd get phone calls. Oh man, if you're coming up here, you better buy now because these things are going through the roof. So I saw properties for like 180, 190, and then it was junk. Now it's 235, now it's 250, now it's 3, now it's 4, now it's 495, and everybody's saying, "Oh, it's too late. I've missed my opportunity." I'm thinking, no. It was escalating very, very quickly. I don't think there was any real reason for that to happen, and I think the correction is bringing things back to normal. It was much needed, and now we can look with more certainty that, oh, I guess this is a good time to invest in a house.
It is.
Yeah.
I'm always looking as well. So
you think it'll be more stable in 23 and 24, especially in 24, then we get into the election thing. Usually things tend to smooth out during the election years from what I found. What do you think?
I think 2023, again, my crystal ball, but I think 2023 is going to be a good year for real estate. There's going to be opportunities out there, but, and I think we may see some continued price, fluctuation, I guess. But it's not going to be significant. And then I think 2024, we're going to see some gains. I think the worst of it, if you want to call it that, is going to be next year.
Okay.
If we lose any equity, it's going to be next year. But again, we have to go back and look at, oftentimes I work with sellers and they're always thinking how much money they lost, right? We've talked about this in the past.
Yeah.
And so it's really a mindset because you only gain when you sell. So if you didn't sell in 2021,
right,
you didn't lose the money. You never had it.
Right.
Right. So let's go back to, okay, this is all the equity you do have when you sell.
Right.
If you sell today or tomorrow.
So this is actually a good time to at least, number one, get prepped and prepared and be on the lookout for a new home that suits your needs and make your move because you're forecasting to the best of your ability. Don't hold Suzy to this.
Well, it's not just my belief system either. I mean, I'm trying to listen to the experts.
Yeah, well, so. I agree. So I tend to think that 2024 is going to be an even more excellent year. I think we'll see some gains, some strong gains in 2024. So I need to ask you, with the interest rates the way that they are, do you see some of the mortgage lenders offering a little bit more creative financing to get people in?
We're seeing sellers, well, if they're working with a realtor that can get creative along with the lender, we're seeing all sorts of opportunities that sellers can offer buyers.
And what kind of opportunities would those
They
be?
can buy down their interest rates.
Oh, how do you do that?
We just negotiate that as part of the offer.
Okay.
And so they can buy down 1 or 2% of the interest rate.
Really?
They can do that for up to several years for the buyers. So, I mean, I've seen sellers offer to pay the buyer's mortgage payment for the first year. And that, in so doing, they can keep the sales price higher. Okay, so there's so many different ways when we're working with a good team to structure an offer that benefits both the seller and the buyer.
That's very creative. In our current market, have you ever seen anybody do like a shared appreciation thing where the seller might do you make my house payment or structure the payments in such a way that after a certain amount of time, 3 or 5 years, if the buyer elects to keep the house, they would actually then buy the whole thing out from the seller, or they sell the house and then split the equity. Is that
Well, it
anything
sounds
that's
like you're
going on?
talking maybe, are you something like a lease option or to that? No?
No, it was actually a shared equity type of a thing.
I
wanted
haven't
to-
done one of those.
Oh, I did one a long time ago. It worked out really good. That was back when interest rates were like 18%.
Oh, yeah.
And so
Well,
we did.
we're not.
No,
we're
we're
not
not that
going
bad.
there.
So I'm
We're
just
not
trying to.
going there.
All right.
But I think the point made is that interest rates in the past have been that high. We've
Yeah.
talked about that.
Yeah.
And so we just need to wrap our heads around the fact that 7% is not a bad interest rate.
No, I was talking to my wife about that just the other day, and she was going, I don't know what all the fuss is. I remember in the olden days, like a few years ago, we were crying for 7% interest rates. Oh, that would be such a great thing if the interest rates were only 7%.
See?
Now they've been down at 2.5 and 3, and when it goes to 4 or 5, everybody has a heart attack. Like, oh my gosh, it's the end of the world.
I know.
It's like, no, it's
It's
not.
just the way we are, right?
Yeah, it's like 7%. That's still pretty cheap money. It's still
It
very
is.
cheap.
So we have a lot to look forward to. And I am over the doom and gloom. I don't listen to that. It's all about mindset too, right?
Yeah, it is. So, in your opinion, I think I know the answer to this question already. Would you recommend someone to buy a home in today's market?
I would.
I had
I
a
think
feeling.
it's a great idea.
I had a feeling you'd say that.
Well, let's talk about one other reason.
Okay.
Have you, I think you have, but most of us have kind of checked into rental rates.
I have.
And especially if you look at a graph. And by the way, I have graphs to back up a lot of this research that we're talking about today. So happy to email that to my clients. Anyone that would like it, I can send it out. But it's good information, so you can see it visually. Okay, what was I saying?
You were talking about you're talking about interest rates, and people can email you to show you the chart and the graph and
Oh, yeah. Yeah. Well, rental rates.
rental rates.
That's
it.
what I wanted to talk about. Rental rates. So I went on and I looked at a couple local property management websites today just to see what the average rental would go for.
Yeah.
So here in St. George, if you were looking for a 3-bed, 2-bath, 1,600 square foot home,
Yeah.
you're easily going to pay somewhere around $1,750, that's $1,800 a month to $2,200 a month right
Okay.
now.
Wow.
And then for a studio or 1 bedroom, it was as high as $1,400,
Oh my
depending
gosh.
upon the newness of the unit.
Yeah.
So, for instance, I was just working with a first-time home buyer a couple weeks ago, and the price of the home for a payment of about $2,400, we were able to get him into a home in the $380 range.
Really?
So when you look at the opportunities that are currently out there in that price range,
Yeah.
then you can say, well, why wouldn't you consider buying?
Yeah.
Right?
It makes much more financial sense to spend the same amount of money or maybe even less and buy. I know when we were first looking up here, we were comparing what we were paying for rent in another state that's way south of us, which was exorbitant, and what we could pay, what we could make a house payment for up here. And my wife goes, we could buy 2 houses for what we're paying for rent right now.
Isn't that crazy?
It just makes more sense to, if you can swing it and you're qualified, to just buy the house. Just figure out a way to make it happen.
Well, and that's my appeal to buyer or renters is let's talk about it, because chances are you can probably qualify.
Yeah.
So
yeah, I liked what you said the other day in one of our meetings, and you've mentioned this before in our shows, but it's important that people just call you and talk to you, because some people are of the mindset, oh, I'll never be able to do this. I don't make enough money to qualify. It's too expensive. Interest rates are too high. And what they're doing is they're literally talking themselves out of something that they could probably do if they had the advice and help and guidance of a real estate expert such as yourself. So I think the moral of the story is just call Suzy.
just call Suzy.
Just call Suzy. What's your phone number, Suzy? How do they get a hold of you?
It's 435-229-8378.
And where can we email you?
SuzyAppel@gmail.com.
Got it. Is there anything else you'd like to?
Well, I'm going to end with this.
Okay.
Home ownership wins over time. If you compare it to anything else with regard to an investment, it will win over time every single time.
I think that's
there you have it.
Good words of advice. We want to thank everybody for tuning in today and listening to Suzy Appel, Real Estate Made Easy. My name's Michael Mollenhauer. I'll see you guys again next time.
Thanks, Michael.
Thanks, Suzy.
This has been Real Estate Made Easy with Suzy Appel from Real Broker Red Rock Real Estate. For more information, SuzyAppel.com. That's SuzyAppel.com. We invite you to join us again for another edition of Real Estate Made Easy with Suzy Appel. This has been a production of 1-to-1 Network.